Hello, everyone. Jim Malone here, coming to you live on Dallas Trading Floor. Actually, I'm going to reverse the camera here. It's going to kind of show you sort of my screen as we go live here, and you'll get all the you hopefully get we'll get all the we'll get a lot of the slides and everything like that. So I'm going to reverse this now, and we're going to take a quick look. Well, goodness gracious, I can't seem to have. Oh goodness, let's see if I can do that. Flip the camera. Did that work? Well, not really. I guess you're seeing. Boy, let me see if I can get it back here. Sorry about that. So I'm going to try to go live here again, and it does not work. Okay. Well, all right. Okay. Let's see. Well, that's not going to work either, is it? All right. I can kind of see it through the background here. So I'm going to try to see if I can change this. No, this is not working. All right. So let's see if I can just go back in here and end it. Okay, come on, end. Goodness gracious. Come on. Flip the camera back. Try in now. Yes, thank you. All right, flip the camera. Does not work. We're having a bit of trouble with. Are you sure you want? Yeah. In the live video, yes. All right. Well, that was interesting. Let's try to go live again here with on TikTok. We're having a little bit of difficulty here, and I'm just going to see if I can create it so that we can get the right thing. It's a little bit tricky. There we go. All right. Super. I think we're now back. And we're going to be able to go live. Okay. Thanks, everybody. Thanks, everybody, for that. I had a little bit of trouble going live there. My camera kind of went crazy. Well, everybody, the market is kind of taking a swan dive right now. As a matter of fact, I just looked at the price of Netflix. It is down after hours, almost 100 points. Absolutely amazing. There is going to be, I mean, we've been in a market correction. Tomorrow, it's going to open up very, very much lower. But you know what? We can make money in this kind of market. What we got to do is we got to switch our strategy and everything. Now, this is our close on the market today. The Dow Jones was down. The S&P was down. The NASDAQ was down. Pretty much everything was down. The Russell was down. But no need to fret. We have some ways to go. I'm basically out of everything except for Tesla and Rio Tinto, which is Rio Tinto is a mining company. So let's check in on Tesla. I just want to take a look here really quick. TSLA, of course, is the address of it. So I'm going to pull over here to the chart on Tesla. We are off after hours. We're not off significantly. We're still holding up here. We were up just slightly, and we were a little bit off hours. I have set my stop losses at 980, but I may move them down to 900 today. We're going to have a big sell-off tomorrow. That is definitely going to happen here. So we got a rig for that. Oh, wait a minute. That was yesterday's. Oh, yep. Okay, this is today's. Jeez. We had a swan dive on Peloton. I kind of want to see how that's doing. It was down 7% today. I've been warning on Peloton for a while. I do have a great bear trade on another company called Beyond Meat, which you probably heard of. That's taken a swan dive too. We can make money on that one too. But let's look in and see how Peloton is doing. PTON is the symbol for Peloton, of course. And let's look at the after hours number. Well, it actually has firmed up a little bit in the after hours. That is interesting. Let's take a look at this. Yeah, it's firmed up. It's got a relative strength of 1. That means 99% of all the other stocks are doing better. It looks like it is trading up in after hours 8 cents. This is when I'm looking for a possible bear trade tomorrow. Be on the lookout for that. I'm going to be putting that out. But that one is an interesting one as well. So that's Peloton. I want to take a look at another one here. But if you want to get on our free January 2022 stock watch list. Go to bit.ly/DTF0025. Now, before we get into the slides, I want to show you a bear trade that I did talk about today. It's the Beyond Meat bear trade. Symbol on Beyond Meat, of course, is BYND, kind of like Beyond Reality. And it is kind of down. It's down even in after hours too. But let's check in on this. By the way, with this kind of trading, you can make money even as the stock goes down. This is where we entered the trade today, basically at 65.22. It closed at 61.41, but it has gotten even weaker after hours. This is the live chart of Beyond Meat, and it is down another 41 cents. So I think this is going to open a little bit lower, a little bit lower. So let's go back here to this one. This is an interesting trade. I did put out a video on it. Basically, here's what happened with this one. By doing this trade, we put about $1,120 in our pocket today. That was pretty good. The maximum risk on this trade is of $880, and the maximum return is $1,120, which is the amount that we put in our pocket. If this thing stays below 62.80 at expiry, and I do think there's a high chance of that currently. It's at 61 and going lower. So wow, it's it's looking bad for Beyond Meat, but if we do this trade, it could be pretty nice. Here's how I entered it, just to give you kind of a update on that. Well, I'm not doing quite as well on the Iron Condor that I had on Netflix, and Netflix is just taking the swan dive. NFLX, of course, is the symbol for Netflix, and I kind of want to jump on over there and show you kind of what's going on, or the good, the bad, and the ugly. It's currently, Netflix is down $96 in the after hours. Now I do believe it's going to dead cat bounce up. When it dead cat bounces, I will adjust the spread trade. But look at that, unbelievable! It closed at 508. We had earnings. The reaction to earnings were just awful. They were awful, and it just went down. Let's take the weekly chart and just take a look. I don't know how bad that they were, but it just seems that they were terrible. The market didn't like it, and it's punishing Netflix. I do think we're going to get a dead cat bounce on this one. We will see. Let's see what the news is on this one. We just went through earnings. This is why sometimes it's best not to hold anything in through earnings. And then, of course, I have to eat my own dog food because I always tell everybody that, and sometimes I don't do that. So sometimes that's the way. Dow Jones futures fall as. Oh, look at that. Okay, so it was the subscriber guidance on Netflix. Let's see if we could get a look-see on that. Well, that's very, very interesting because that's the news that tanked it. And boy, the market is harsh. Boy, they don't suffer fools. But I do think we'll get a dead cat bounce on that one. I want to show you kind of how I've been trading this one. I don't know if you're in this trade or not. Let's come over here. I have redone my chart, and as you can see, wow, we're in the red. We just started this trade, and then, of course, the market really hated it, and it moved down. I have it at 413. Currently, it's at 410, but I do think we're going to get a little bit of a dead cat bounce. If we do, then once it trades up a little bit, and that's almost always the way it goes, I will adjust this. I will adjust this spread down and out. So down and out in Beverly Hills. That's what we're going to do tomorrow. I'm going to be working on this tonight. And of course, if you're on the list, if you're on our free action trade alerts, I'm going to try to get this out to absolutely as many people as I possibly can. It's super easy, of course, to get on the list. All you have to do is go to www.Dallas Trading Floor, and then it just right at the top, first and last name and email address, and it will give you a good go. If you're watching this on TikTok, and I finally got this up on TikTok, you might want to jump on over to our YouTube feed. And the reason is on the YouTube feed, we have we've got all the charts and everything we're showing, but there's going to be a major sell. There's a major sell-off on Netflix. Netflix missed, and it's not going to be good because this is one of the FANG stocks. So this is not going to be good. We had a trade on Netflix. We're going to be adjusting that tomorrow, but we probably will get a dead cat bounce. But this is also opening up some opportunities in some other things, and I'm going to show you this. I showed you a little bit about the Beyond Meat spread. Beyond Meat spread. Can you believe that? The downturn in Beyond Meat, we had a bear call spread on it, looking good. We're going to be doing one of those on Peloton as well as it takes a swan dive. So if you're on the TikTok and you want to see kind of what's going on, just go up to this address right here. Just type this into your little browser and you'll be good to go. Also, you can go to my profile, and I think the link, I don't know if the link is up on that. I didn't have time to put everything up, but if you go to this link here, put this in your browser, you'll jump right on over to where we're broadcasting right now. So those are the two biggies. And without further ado, let's get into some of the questions. Thank you everybody for holding on. So we're going to try to get it back up. So here we go. I'm going to take this one off here, the banner. There we go. And let's get into some of the comments, questions, and questions. Jay, I think is first up. Let's see. There we go. Hey, Jim, I made $300 today shorting DAL. Oh, by the way, should I switch to Disney? Great idea, Jay. Jay, I want to show you this. We have I have some stuff for you. Let's see if I can get it up on the screen. I have a trade. I have a bear spread on DAL as well. So let me pull that up. And that was I showed that on the show yesterday, and I haven't updated the slide, but let's do that right now. That's Delta Airlines. DAL, of course, is the symbol on that, and I'm going to switch on over to that trade right now. So basically, this is the one we did yesterday on Delta, and this was the bear call spread. Now, this is yesterday's number, so I've got to change that current number. Let's just see how it's trading here. I'm going to go over here and bring up the okay, let me see if I can pull that over. Oops, pull that up so really quick. DAL price. And what I'm doing, everybody, here is I'm looking up the price that Delta Airlines closed at today. And what I do is I pop that into my into my little calculator here. It did trade up. That's interesting. It did trade up just a tad. So what I'm going to do is I'm just going to pop that in there. We're going to go back over to that, and we're going to pop that in, and we're going to see where that trade is taking us. So we're looking at the Delta Airlines trade that we had on this one. Let's see if it is going to give us. There's Peloton. There's that. There's that. There's that. There's that. I'm just trying to get the right trade. Okay. After hours, did I get the right one? This is the hardest thing sometimes to figure out exactly which is the right screenshot at the right time. So 3:55, 4 o'clock. Okay, yeah, it's this one right here. So we'll put that right in. Yeah, there we go. Delta Airlines. This is kind of where it's trading right now. And I'm going to see if I'm going to take that down here. There we go. All right, so I'm going to pop on over to that trade. Here, and let's kind of see how the trade is doing. Delta closed at 38.84, so it's right about here. So it's pretty accurate. We dropped a little bit on this trade. So this trade currently, the one that we did basically on this is the trade here. The one we did on the 19th. That's yesterday. This is the one we put on. It is moving right down that trend, and if it continues to move that trend, hopefully we'll make all the money. It will move down below 35, and it will make $924. That's the hope, anyways. But congrats on that, Jay, for doing that very nice short. Should you switch to Disney? Good question on that. If you should switch to a bear trade on Disney, I don't know right yet. I do think you're going to see some of these Carnival Cruise Lines, the airlines. I just can't see them doing well in this kind of environment with lots of inflation. So we might have a potential for a short here. But right now, what I want to see is right now, as you can see, and I don't know if you can see this, I'm saying you can see it. Right now, it looks like it's pulled all the way down to the bottom. It will trade up to the 21-day line. That's where you want to do that short. You want to wait until it bounces up and it tries to grab up onto that 21-day line. That 21-day line is about 153. I do think, even though it's pulling down in after hours, let's see if this thing trades up tomorrow. If it does, boy, you want to look at shorting this one. I agree with you. This is looking, what's happened is right now, Disney is above that 21-day line. That's this green line here. I don't know if you can see it. That's this green line. And if it trades, if it starts to move below that, and it looks like it just has, then when it rallies back up to that line, that's where you want to short it, because that's where it's going to take the dive. Earnings are in 20 days on Disney. Not looking very strong, but very interesting. Really appreciate that. The jury is still out on that, and I just don't know. I just don't know. I'll have to look at that some more. Very good stocks here: AMD, Ford, and Rambus, RMBS. All of these stocks, the techs are having a struggle right now. They're absolutely having a struggle right now. One of the stocks that is doing well is Ford. It has pulled below the 21-day line though, and so it may be time even to get out of Ford. Ford is still, pretty far above it's pretty far above the 50-day line. Now, Ford is below the 10-day line and below the 21-day line. So Ford is definitely losing momentum. So obviously I wouldn't enter a position here. I would consider taking profits if you have profits in Ford right now. The whole market in general is moving lower, at least for right now. So I would look to do that with Ford. Now let's go to AMD to see if there's a similar opportunity there. Looking at AMD. AMD is it's just weak. I want to look at the technicals here. Basically, right now, we're below every major index line: 50-day, 21-day, 10-day. We're still above the 200-day. That's good. But the trend is down, as you can see. We're 8% below that 10-day line. We're 10% below the 21-day, and we are 15% below the 50. So the trend there doesn't look good either. I would take profits in AMD. I take profits in AMD if you own it. I don't own it right now. I would take my profits now and run, because it's probably going to go lower. Not that it's a bad stock. It's just the overall market. Lots of sell-off going on. There's a lot of funds out there. I don't know if you follow Kathy Woods or not, that are hurting right now. So that's one you might want to consider moving out of. I did close my Tesla bullputs Iron Condor today for a slight profit. Glad I did. Probably should have done it with Netflix too. I thought Netflix would hold up a little better. But right now the market is it's not rewarding. Rambus, great company, just not a great chart. Let's look at the technicals. It's just 7% above that 200-day line. This is a good stock. This just shows you the overall weakness in the market. Electronic semiconductor fabless is moving lower. One of the only real defensive plays right now that I could see in the market, that's why I'm going to the short side, is the XLE. And of course, that is the Energy Select Spider. And what that is that's a group of oil stocks. And you can see that's doing pretty good. Look at that. it's moving up above that 59 buy point up. It's off a little bit today, but still very strong. If you want to keep in the market, and right now I don't think the market is probably going to go a little bit lower. This is one you might want to consider, the XLE. It is a little bit extended, but I like it because with inflation, oil is going to do well, and you don't have to choose which stock you're going to win with the Energy Select Spider. By the way, I do have another trade, and let's see if I can pull that up on the screen here. I'm going to see if I can. Let's see if I can pull this one. This is one of the only. This is one of the only bull trades that I have right now, and it's on. It's on Exxon, XON, being the symbol, of course. Oops. Let's see if it'll let me do that. Search for XOM, Exxon Mobil, of course. That's the bull put spread, and this is one I do have on that we were talking about this in the Discord room, and this one I do think has potentially is good. This is the one I have on Exxon Mobil. What I'm going to do is I'm just going to kind of advance the slides here. This is where it was yesterday, but I'm going to look at I'm going to look at it right now, and this is for Exxon Mobil. XOM is the symbol, of course, and we're at 73.26. So basically no change. I know here it says 73.13 today. It even with all the badness in the market, it closed the day at 73.27. After hours 73.26. Yesterday it was 73.13. So basically this one is pretty safe. This is kind of where probably you want to be. This is in the Exxon Mobil 72.50 75 February 18th expiry bull put spread. This is available, of course, at our great site, and that is but to get information on this, you need to kind of be in the free trade alerts. I think this went out on the free trade alerts, not sure, but you need to go to www.dallastradingfloor.com to take a look at this one. This is a spread trade, and it benefits, and I'm going to show you this. This could kind of give you an idea. This is the one we entered yesterday, and basically this one put $784 in our pocket. Very nice. It has about a 60% chance of success. Even if the market is going down, I think this one is going to do well. And this is the spread trade on Exxon Mobil. We got $783. We could potentially lose on this one. We got a cape above that 71.58 level. I do think we're going to have that because I still think we're in an upward trend. There's a lot of money that's fleeing to this. It's fleeing to Exxon Mobil. Let's look at the live chart here. Everybody, has been talking, we've been talking about everything, related to tech and all that stuff. Well, when the interest rates rise, guess what happens? People look for shelter. And boy, oh boy, Exxon is looking pretty good. The cash flow on this, $10.54, pretty excellent. Last 3 quarters, we've had sales increases, but look at the profit increases. The quarter before last, now we're coming up on earnings in 12 days from Exxon. I may be closing out of the trade early just to protect myself, but it's probably going to be a blowout quarter for Exxon. The last quarter, their profits were up almost 1,000%, which you can't, unfortunately, all of these things are self-inflicted wounds. Unfortunately, the Biden administration don't really have very good economists in there. I mean, I shouldn't say this, but they really don't understand. Unfortunately, by the way, because last year remember when we had oil that was remember when gasoline was less than $2 a gallon? Not anymore. So you want to buy Exxon long because we are going to have maybe not quite as bad as California, but let's look at the average gas price in this country. I'm just gonna put that up there and look kind of around where we are, kind of what's going on here. I think this is, yeah, okay. So remember last year, all of our gas prices were less than, we're basically less than $2. Well, this is right where we are, near where we are. This is in Plano, Texas. They've got 285 regular. That's pretty good. This one's 310 at Racetrack, and they're usually pretty good. So what I'm trying to say is Exxon Mobil is looking pretty good because we're going to have high gas prices, and guess what happens when there's high gas prices? When there's high gas prices, people make money. So this is an area that we can be bullish in. We can be bullish in this area right now. Absolutely. This is Exxon. I do have this bull put spread on it, and it will benefit as it moves higher. So most of my trades are going to be bear trades, but some of them are going to be bull trades. So let me get off my soapbox here. Let's go back to the comments. Thank you very much, everyone, for waiting. Any thoughts on Lucid? I don't think we want to be in speculative stocks right now just because of the way the market is trading. So LCID, and let's take a look at that bad boy here. Here we go. So basically, this is the chart for this is the chart for Lucid. Let's look at the technicals here. I want to look at that on the technicals. Basically, we are down. We are still above the 200-day moving average, which is good. We're 35% above that. We don't ever want to buy a stock below that 200-day line, so we're up above that. That's not bad. The 50-day, we're in a downward trend, short-term downward trend, but we are still above the 200-day line. Here's my take on Lucid. I just think that I'm drawing the reversal line here. I just think it's a good time possibly to take profits if you've got them. Because unless it moves above this line that I just drew, it's in a downward trend. And unfortunately, with everything being in a downward trend like it is, that's not a good place to be. So I would be a profit taker here. And part of the problem, of course, is that, we are up from the pivot, the cup with handle pivot that we had back 59 days ago. That was actually back over here. We are up from that, but I am a little afraid that we're going to be pulling back. This has been a good performer, but I just think in this market, we've got to be so careful. And Jay basically says, rest in peace, Netflix. You are so right about this one. And you know what? I have the spread trade on it, so I should be like, but here's what I'm going to do tonight. I'm just going to adjust this bad boy. And I think we're going to lose some money, but I don't think it's going to be as horrible. But look at this right now. The after hours is terrible. It's off almost 100 points. So tomorrow it's going to open up, and you can't even see it. It's going to open up way down here, so you can see this big thing. But we will get a dead cat bounce. So I'm going to be adjusting this trade tomorrow. I'm just going to be adjusting this one tomorrow. Hey Troy, thank you very much for that. Yeah, Peloton. The problem with these companies like Peloton is they're really not companies. They're advertising vehicles. They have a bunch of advertising. They not even make their own product. And if it goes out of fashion, boy, it looks really bad. I'm going to probably be doing a bear trade on this one tomorrow. I'm hoping that we're going to get a little bounce. It'll pull back, and then whammo, we should be able to make some money on that. But thank you very much for that very kind, for that very kind comment on Peloton. All right, so let's take a look at the QQQ. How about the QQQ? Well, I don't think you want to be buying the Qs right now because the market is an overall downtrend, and when that happens, not a good look. This is the QQQ with all my little notes on it. We have fallen below that critical, and then I just want to put this out here. We've fallen below that critical 200-day moving average. This is part of the reason the overall market right now is in a downtrend, and that's the thing. We don't want to be in the Qs when the market is in a downtrend. if we're doing the ETF strategy that we talk about, this is the Investor Business Daily ETF strategy. And it's a great strategy because I use it for my funds that I'm waiting. I have cash in. I'm waiting to invest these funds, mainly to pay taxes. If the market is in a correction like it is now, we want to be 100% out of things like the QQQ. We want to be all in cash. If we move to a brand new confirmed uptrend, we want to be 100% in. And if we are in a market trend under pressure, half in cash, half in the Qs. Right now, you don't want to buy the Qs. Not a good time to buy the Qs because we are in because we are in this downtrend. So not a good time to buy the QQQ. We are in a confirmed, not a confirmed, we are in a correction. So whenever we're in a correction like this, it's just not a good time to buy the Qs. Oops, does it let me? It's not letting me. Let's see if I can. Oh, let's see, go like that. Maybe it'll work. Oh, that's a ticker. I don't want a ticker. So let's see if I can edit that. Well, goodness, it's not letting me. It's not letting me do it. Oh well. It's not a good time to buy the QQQ. That's the long and the short of it. Can't get everything to work right on the system, having a little bit of time. So no buy on the QQQ. Not a good time. Not a good time to buy. Not a good time to buy the QQQ. It just isn't. So really, just not a good time to buy a QQ. It is in correction, so we don't want to be buying this. As you can see, we have this downward trend, and that indeed is part of the problem. And we're below that 200-day line. You really never want to buy anything below that black line. That's the 200-day moving average. Don't want to do it. It is not a good look. So I would not recommend doing any buys on the Qs right now. Just not a good time. All right. So what do you think about SLG? Let's look for EH. Let's look at SLG and see what's going on. Interesting. Okay, so this is a REIT. So this is office properties. Absolutely not. Absolutely not. No. Unfortunately, we don't right now in this market. The REITs have been doing fairly well because people are looking for that guaranteed income. But office properties in the New York metro area, no. We are not. With this inflation, we haven't seen the devastation that's going to happen in the New York the New York office market. Now the home market is good. The single family home market especially is good, but the office market, especially in New York, I just don't think you want to be in this one for a lot of reasons. I'm sure this is very well run, but I just don't like the fact I don't like office buildings in New York because of COVID. And it's true, people are going to start going back into the office, absolutely. But the thing is, a lot of people aren't going to go back to the office. What's going to happen is a lot of people that were going in the office are going to get fired, unfortunately. I hate to say this, it's happened to me. And when that happens, they're going to be doing something else, and they're not going to be going back into the offices. So I can't see this as a very good deal right now. But let's take a look at the technicals. We're still above that 200-day moving average, which is good, and we're above the 50-day. So in the short term, it's starting to turn. This one, I have a feeling, is probably going to turn lower. It's up 5.75%, but I'm not confident. I'm just not confident. Even though it has an excellent checklist, I am just not confident in this thing. Yeah, see, we're what happened is we did go up to that pivot. We were rejected right here. I think this is going to be struggling. I really do. I believe it's going to be struggling. We'll see if it can hold the 21-day line. If it can, that's a good thing. But I'm afraid if it doesn't hold that, it's going lower. So, and it may turn around and form a handle, and that would be a good thing. But I just think right now in this market with the way it's trading, I think you got to de-risk a little bit. I would either be short or, just in some of the very, very defensive names. There is one stock, and I never recommend this, but I'm going to now because of what's going on. But it looks like Berkshire B, which is basically Berkshire B. This is Warren Buffett stock. It's basically a railroad and an insurance company with lots of Apple stock. So that's really what it is. I don't think they're going to do as well in the Apple stock, but on the other, they're probably going to do okay. BRKB. This is one I want to take a look at. And it's even down too. So the market's just moving in the wrong direction right now. And this one looks like it's going down too. So wow, not a good look even with Berkshire B. So I wouldn't be in SLG right now. Right now, the best position to be in is in cash, building that watch list, getting ready, because there are going to be some awesome opportunities out there. But right now, not the time. The market is adjusting. All right, let's take a look for EH again at HD. Of course, that's Home Depot, HD. And HD is doing a swan dive too. I hate to say this, but yeah, it's not looking as good as it was. It's right above that 21-day. It's right above the 200-day moving average. If you're in this one, I would consider taking profits. We'll see if it holds up at the 200-day line. It's only 1% above that, which means that this is going to trend lower. When a stock moves below that 200-day line, that means that the big boys are starting to sell. And you would think that this one would do well, but I just have a feeling with this one in the market that we're in right now, a lot of people are going to be putting off those home improvement things, and they're going to be, and this is going to be a little bit more difficult. Great company, great management. I just don't think you want to be in. I think you want to start taking profits. This one is still pretty strong. Relative strength is 81, but I do think it's going lower. So I would not, I wouldn't do a bear trade on this one, and I wouldn't do long. I wouldn't do short. I just wouldn't do, because right now I think that a lot of air are going to be let out of the tire. It's a great company, but I just don't think it's going to have the ability to hold up, because it's mainly because of the profits. I don't think they're going to hold up as well. All right, thoughts on Apple, BAC, and Hood. Well, let's look at Hood. That's Robinhood, of course. And Hood, is just a sad story. It's been so negative here. But look at that thing. It is a swan dive. This is the lines that I have here. It has a relative strength of 3. This actually might be a good short. I don't think this is going out of business, but this stock is not healthy. We are still losing money, as you can see. Their sales have been going up. That's a good point. That's good. And they're going to have earnings in basically 7 days. That'll probably do okay. But would I be in this one? Absolutely not. Look at that. It's going down. Unfortunately, I hate to say that, and I don't even think this is a good short candidate. Now, I'm always looking for short candidates. I don't think this is a good one, though. I would just avoid this one. I think that with Hood, the best bet here is to basically avoid it. Sometimes the best thing to do in the stock market, I know this sounds strange, is just to do nothing, to go into cash and do nothing. So avoid it or take profits. Avoid it. I think you really just have to avoid this one. Now, if you're down more, on Hood, if you're down more than 7%, really consider selling. If you got any profits, I would consider selling. But right now, if you're down more than 7%, consider selling this one now, because I don't think it's, at least in the near term, I don't think this one is going to do much better. All right, let's see if Apple and BAC. Let's look at Apple. Excuse me. Apple is such an important stock because it is the most. It has the most capital of any stock in the market. Now, what I've done here is I showed you the bear call spread that I entered here, and it's making money. My bear call spread is making money. That's where I entered the bear call spread, and as you can see, it's kind of pooping down there. So right now, Right now the price of Apple is 162. So let's kind of take a look to see how my bear spread is doing. I don't know if anyone's all that interested in it, but I am. So let's take a look. This is a trade that I put on a few days ago. Let's see if I can get it to come. What I'm doing now is I'm moving over to the slide deck that I keep for each of these trades, and what I'm doing is I'm replacing the number where it closed today because I haven't updated it, and updating the chart. So let's kind of take a look here. I'll just go right over here to this, and as you can see, there's my slide deck. Basically, let's see where we closed today on Apple, and this is going to show the what I'm doing here for this. And let's see if I can move into the right one. Did I put it screenshot? I'm looking. Let's see, 4 o'clock. Okay, yep, there we go. So this is the price that we closed at on Apple today, 162.75. And as you can see, wow-wee, look at that. It's making all the money because Apple is taking the swan dive. Kind of make my, there we go. Okay. So if I were in this, and I am in the spread, this one I did a few days ago. And actually, I've got to redo the chart here because I got to get more stuff down here. But this was more successful than I thought it was going to be. Not successful if you're long, but if you're short, this one's doing pretty darn good. What we did here when we entered this trade, and this basically is from the 13th. We entered this trade on the 13th. What we did on this particular trade was, let's see if I've got it. No, I was showing some other stuff. Basically, what we did is when we entered this, we got an 805 credit, and then we entered it at 175. It went down, and then we're making money on it. So with Apple, again, not a good look. I started shorting a lot of these. Not really shorting these. These are bear trades. These are limited risk trades that you do when the market is moving down. But I did do it on, and it's looking okay. All right, let's take a look from Mike. Thank you, Mike. Let's look at MTTR's fundamentals. All right, good question on fundamentals. Definitely like to. There's two ways, by the way, and I want to be clear on that. There's two kind of ways of looking at a stock. One of them, of course, is the technical, and that's what I kind of want to have been showing you. That is those are the charts and graphs and those kind of things that I've been showing you. The other one, of course, is the fundamental analysis. So let's look at MTTR, and that is Matterport, and I'm going to push that up here on the screen. There we go, and we're on. This is Matterport here. So let's take a look at this bad boy. All right, it is kind of moving lower. That is not good. That is not a good thing. This is a relatively thin stock. It is a $11 stock. Typically, a fund won't invest in anything below $10. So if this thing crosses below $10, which is highly likely given this chart, this will be sold. The funds will sell this one, and it will move lower. But let's look at the fundamental analysis to kind of see, why is this doing what it's doing? Well, the next earnings are on March 16th. Let's look at the sales. The sales have been pretty impressive, up 100% in the first quarter of 21. That's the March quarter, ending March, 108%, then up 21%, and then up 10%. So we have sales that are moving up, but they're declining in their velocity. So we have slowing sales. That's not a good thing. We also have, it's a growth stock, so we have essentially losses, and we have negative cash flow. And in this kind of environment, that's not good, because in the environment we had before, we had low interest rates. Before the Fed blew everything up and with the interest rates, the kind of stocks like this, they could be tolerated. But I suspect what's going to happen with this one, there's 98 funds in this one. My guess is once this falls below $10, we're looking at a situation where they might head for the door. Let's look at see who owns this thing, because that's always a tell And what kind of companies? Some pretty good companies. Vanguard Extended Market Index. So this is index. Okay, this is basically all the funds that own it. So some pretty good funds own it. Vanguard's a good fund, and Morgan Stanley is a good fund. But guess what? I can almost guarantee you. Well, I never can guarantee anything because I can't predict the future. But I can almost guarantee you that if this thing falls below $10, which is likely to happen based on this chart, we're going to see the funds head for the exit, and they're going to head for the exit fast. So this is a potential short, by the way. I hate to tell you that, but this bad boy is a potential short. So that's kind of my take on it. I hope I didn't offend. I hope I didn't hurt anybody's feelings. But yeah, this one's probably going to go down. Boy, I tell you, I have just been negative today on everything. Well, we don't have to be negative because we have the ability to do bear trades. And that's really what I'm concentrating on right now, bear trades in this market, because normally in the stock market, you buy a stock, you hope it goes up. That's the only way you can make money. What you can do with options, and this is the great thing about options, is you can make money if it goes sideways. Those are iron condors. And then if it goes up, those are typically bear. If it goes down, those are typically bear trades. Now, it doesn't always work out. I have an iron condor open on Netflix, which just got hammered. So I'm going to have to adjust that. But the great thing about trading options and the way we trade them here at Dallas Trading Floor is that it's sort of like if you go to the track, I do like the track, I have to admit, and you bet on a horse. Well, the minute those gates open, the window goes down. You can't make another bet. Guess what? In options trading, you can bet halfway through the race. So we can adjust the trade, and that's probably what I'm going to be doing with the Iron Condor on Netflix tomorrow. I'm going to see how it bounces. It had a bad reaction to earnings. It was down $100. So we're going to have to change that one out. But that's why I like in this market. This market right now is retreating a little bit. A lot of sell-off, a lot of fear, a lot of inflation. But we can make money in these markets by using bear trades and iron condors primarily, and then some other more exotic trades. Let's look at Marvell, MRVL. That, of course, is a semiconductor stock. And the semiconductors, this is truly an engine of the economy. And this one has not been doing bad up until just the last few days, in which it's been getting a little bit of weakness. This is still an excellent area. The semiconductor fabless area. This is where NVIDIA is. This is where AMD is. This is where they all live. It's still 15 out of 197. So this is one of the best sectors right now. That's why right now everything is so dicey, because even these very best sectors aren't doing quite as well. Here's the thing with Marvell. It's fallen below that 40-day line. If you have profits in this one, please take them right now. I do think it's going lower. It's not Marvell. It's not Marvell that's a bad stock. But normally, the normal action on this, let's take a look, is for it to come down and test the 40-day line, tested it there, and then it tested it there, and it tested it again, but it's held by falling, and I can't get up, and it can't. So this is probably going to go lower. I don't know if it's going to go all the way down to the 200-day line, but it might, and that might not be a bad thing. So one of the things is when stocks fall like this, we go into cash, we wait for basis to form, and when we come out of this, and we will, this gives us some very, very good opportunities. So it's nothing to fret. A pullback in the market, as long as we're setting our stop losses, we're getting into cash, we're waiting, that can be a very, very good thing. Let's look at some of the technicals on this one. It's still 200 days. It's still 17% above that 200-day average. And the 200-day line on Marvell Technologies at 62.84. We are off on everything else. So the short-term trend on this, less than 50 days, is downward. This is a downward trend. I think you don't want to be in it right now. As you can see, I've been on it for a while, but this is the last time I purchased it. It was way back here as it moved through this pivot. This is always where you want to buy as it comes out of a base and on the pivot. You can see that actually was a pretty good buy because it went up, and then when it went up 20%, I sold. But that's the kind of thing you want to look for. But we're not in a market like that right now. The market is in correction. So a lot of these ways of buying things don't work as well in this particular market. We will change back, but right now, not so much. All right, let's look at Lucid. We talked a little bit about Lucid. Let's look at space. This is going to be a bad, sad story. SPCE. I've made money on the stock, but I made it basically by buying it and then pushing up my stop loss absolutely as fast as I can. This one really doesn't have any earnings, and that's the problem. Not a bad idea. Good idea on the stock, but it's now below $10, and it's just looking sad. I don't know if this one will. I don't think this will bankrupt, but I just don't see this one being all that good. If you're down more than 7% on this one, please sell it. Please take those. Please sell it. It does actually have some funds in it. Amazingly, 245. Some of these funds may just hang in here. I want to look at those funds, but I have a feeling a lot of these funds are going to be looking for the exit on this one. They're going to be getting out of it. It's a significant 16% of the float of this stock are funds, so that is fairly significant. These are the funds that are in it currently. Some good ones: BlackRock Advantage. These are some pretty decent funds that are in this one. But here's the thing with here's the thing with Virgin. I just don't think it's going to be. I don't think it's the way to be. This is the weekly chart, as you can see. We're almost back down to below its lower low. Its lowest low, the lowest low on this stock, basically, and I think we can see it. This is totally done a round trip. The lowest low on this one is $6.88, and that was made back in September of 2019. So what we were looking at, this one is not a good look. So I don't think you want to be in this one right now. So if you're down more than 6%, so down more than 7% on this one, please consider selling it. Please, 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 because I don't think it's going to go. Take profits in Hood. That's right. That's a good question. Thank you for that, Derek. All I'm saying is, if you got any meat on the bone, boy, just now's the time. Now's the time. I don't know if it's going to come back. It may come back in 2 or 3 years. Who knows? But no, it's not. Good time to sell. All right, what are your thoughts on Square? And if you've been following us, you know that we had a very nice trade. This was our first bear trade on Block. And I'll show you the chart on that one. This just continues to move down. Now, we did close this one early. Probably shouldn't have closed it early because we probably could have made more money on this one. But hey, beggars can't be choosers. I'm going to show you the trade that I made on Block. So what I'm going to do is I'm going to go over here to the Square, the trade that we made on Square. Now, we did close this one early. We did close it for a profit, and we were in it earlier. So what I'm going to do here is I'm just going to pull it up on Square. So this is the recap. Oops. Yeah, this is the recap of the trade that we made on Square. Now, we did close it. I only made $155 on this. Can you believe it? I was just too antsy. Basically, that's sort of where I closed it right there, as it went down. We opened this trade, and we started this trade out on the 17th of December, and we were closed on this. Where did we close it? We closed it on the 11th of January when it went down to 148. And I probably should have just hung out, and I would have made all the money here. But I figured, well, why not take the profit? Right now, Square is. Let's see where Square is right now. But let's go to see if I'd held on this. Sometimes it doesn't pay to close them early. Close it. You should hold these trades, these spare trades. But let's look at Square right now. Yeah, look at that. It is down even more. It's down even more. We went into this trade in December. We wrote it down. Basically, we wrote it down, and it's just been nothing but red, as you can see. It just follows that line, just like clockwork. Yeah, and it is just not a good one. Obviously, you don't want to be long on this one. Do you want to be short on this one? Well, I'm looking at it. Let's see if there's any more meat on that bone. Well, credit card finance, this has not been a good area. We have earnings coming up on the 23rd, so we got a little bit of time. We definitely have had slowing in terms of their sales. Their sales have been pretty decent, actually. and they do have profits, but their profits are going down. So my guess on this one, in this kind of market, it's probably going to go lower. It's probably going to go lower. As you can see from this chart, we entered this bear trade here, and this is classic because we had the death cross. That's when the 40-day line moves below that 200-day line. That indicates trouble ahead. Trouble ahead, trouble behind. The Grateful Dead song. That indicates problems. That we shorted here. Why did we short there? Because as it was coming down, it came up and it touched that 10-day line, and I knew it was going to get weak. It traded up, and then whammo, it traded down, and I just closed it there. Probably should have held on to it for another bump down, but it came up again to the 10-day line, and then boom, it came down again. So this is kind of what's going on with a lot of stocks in the market right now. This is kind of how I was trading it. This is how I was trading it. But when a stock goes down, we can make money with those bear trades. So not all the bear trades work, but a lot of them do, and especially in this market. So, anyways, that's my take on it. All right, we're coming almost to the end of the hour. Let's look at SoFi and BBIG. Let's look at BBIG. I think this is Biggie Small stock. Vinco Ventures. All right, it operates manufactures sales and fulfillment. Hobby. Interesting. I have no idea what this company does. Okay, let's look at the weekly chart. Let's look at the fundamentals first on this one, just to see what BBIG does. It's in Bethlehem, Pennsylvania. Nice place. Not a good look on the fundamentals. It was doing okay. Their sales were going up in the first quarter of 2021. On March, we went up, but then it started to go back down. So they have falling sales, and they have falling profits. Not a good look. BBIG, falling sales, falling profit, doesn't look good. 22% funds are in this one. The cash flow is -2, so they're breaking even. A little bit less than breaking even. And apparently they're going to acquire this company called AdRiser, an ad tech company, for $108 million. Sounds to me like they want to get out of the toy business. That's what that's looking like to me. That they want to look at. This is like the toy business isn't working for them anymore, and they want to get out of it. They want to get into something that might be better, like ads. But I'm not liking this chart. We're below the 40-day line. This is the black line. You don't want to be below that. Here's the thing: if you're in this one, again, and boy, I'm being, I don't want to be Mr. Negative Nelly here, but if you're down more than 7% on this one, consider selling it, because this doesn't look good. It doesn't look good. Let's go to the monthly chart to see kind of, this is all over the place. Basically from $1.20 up to $12. It's at $3. This is not really investable by even the funds. Let's see if there's any funds in this at all. Typically, a fund won't buy anything below $10. Well, there are. Oddly enough, there's 39 funds in this. That's amazing. I think there's going to be less. I wouldn't want to be in this one. Sorry to say. BBIG, I just don't think you want to be in it. And it doesn't look good. And let's do SoFi. Not do the last one. SOFI. I do like the area that this one is in, because I do think, Upstart is in this area, but, this is, this overall market isn't being as kind to, it isn't as being as kind to some of these software, these consumer finance companies as they were being. This is below the 200-day line. Never buy anything below this black line. Not a good look. We do have increasing sales here. This is good. We have some volume. We had a very nice volume spike here. It came up to, but see, this is the problem. And again, this is kind of a little bit more technical here, but you see this line, this red line, as it crosses below that black line. That's called the death cross, folks. And when that happens, that means decelerating. This is not being acquired. It's being sold off. This is a dead cat bounce, and I would not be in this bad boy. Its relative strength of 23, not looking good. Yeah, look at that. It is below the 200-day line, below the 50-day line. That's not good. In the short term, it's trended up a little bit. It's 10% above the 10-day line, and it is above the 21-day line, but you know what? This just doesn't look good. So on the pattern rec, let's see. It's 31% below the pivot, which was 56 days ago. Cup with handle, the pivot being 21.27. This is in a downward trend. Not a stock that you want to be in right now, unfortunately. So that's the downward trend. Don't buy it. Not worth it. Not worth it. Okay, everybody. Thank you very, very much. Let's hopefully we're going to have some more good opportunities with some of these bear trades. I'm trying to create and put out these bear trades as fast as I can. And one of the ways that people are getting access to them is by going to www.Dallas Trading Floor and signing up for the action trade alerts. And just so that you won't be scared off, it's a really simple site. So what I'm going to do here is I'm going to put this up, and hopefully it'll work. All right, there we go. Okay, so this is how the site looks at www.Dallas Trading Floor. Just put your stuff here where it says free action trade alerts, first and last name, and also in the SMS, because we do texting sometimes. Email address, very, very important. Just hit that subscribe. You'll be on, and it's free. So that's the way to keep up with us. Everybody, thank you so very much. I didn't get to everybody. I wish I wish I could get to everything. What do you suggest for Peloton? Sell. That's what I suggest. All right. Thank you very, very much. Thank you very much. Okay, I will be back tomorrow at 4 o'clock. One thing I want to ask you, if you could, I know everyone does this, so yeah. But anyways, if what I'd like to ask your help with is please like this. Liking this helps me get it out to more people. If you like the show, so smash that like button, please smash it, and that gets us out to a lot more people. We're growing, and we're getting better, but we really need that help with the smashing the like buttons. Do consider going to www.Dallas Trading Floor, getting on the action trade alerts. That's a great way to go too. And I will be back tomorrow at 4 o'clock or thereabouts. Sometimes I'm a little bit late. 4 o'clock with a recap and some of the bear trades that we're getting into. Happy trading, everybody. Hope everyone's doing good, and stay warm and safe. And we'll be back tomorrow at 4 o'clock.